Okay, guys, so let's start now. Yesterday, last week, not yesterday, last week, we were talking about how to predict the next candlestick. So I think today we're going to talk about how to use Fibonacci lines. How to use Fibonacci lines to predict the next candlestick. Because one of you requested that we should treat that topic today. So I'm going to show you how to use Fibonacci lines to predict the next candlestick. So before that, let me quickly say something about trading. Let me just say in the next 10 minutes, let me share something about trading. If you learn something from me, if you learn something from me and you go back and let's say you try to take every details, every word that I said, and you try to practice it, and you are not getting it, that is, you have to work on your standing. You have to work on your understanding, how you understand something. Because when someone taught you, you have to understand what that person taught you. And how do you do that? You look into every details of what that person said. Like me, if I want to learn something from someone, I will not just only hear. I will go back home or I will sit down on my own and try to figure out what he says. What he says, every word he says, and try to find out why it happened and why it doesn't happen. So if you want to learn how to trade, or let's say you are learning from someone on how to trade and you want to become like that person, make sure that you do, or you make sure that you understand all every details from that person. You know, when you cannot, let's say you are too lazy to try to understand something, or let's say you are too lazy to study something, you might not get what you want. So what I'm saying is that if you learn something from someone, either me or anywhere or anybody else, and you want to get that what that person is saying, you have to understand what it means. Okay, you have to go through in all the details, because everything about me, everything I know about trading is what I'm sharing with you guys. There's nothing hiding from you. In fact, I like to expose myself. Okay, so I'm not hiding anything from you guys. So everything I know about trading is what I'm sharing with you. So today we're going to talk about how to use Fibonacci lines. How to use Fibonacci lines. Um, to some people, when they want to use Fibonacci lines, they usually place the lines at the body to body, while some people choose week to week, from week to week. Some people choose body to body. Okay, but when we talk about high, like candlestick basic, candlestick basic, when we talk about high, we are talking about the upper shadow. Okay, you know, when the price move to this level and reverse to the downside, these are the high. Okay, these are the high, we are talking about the shadow. And the price drop to the downside and reverse again to the upside, so these are the low, we are talking about the shadow. So if you want to draw your Fibonacci lines, you draw from high to low. Okay, you draw from high to low. Okay, we are not talking about draw from close to open or draw from open to close. That is not what we are talking about. We are talking about draw from high to low, or let's draw from low to high. Okay, And if you want to predict the next candle using Fibonacci retracement, you have to look at the chart. Okay, number one important thing to draw after when you want to draw your Fibonacci line to predict the next candle, you have to look at the chart. Okay, like now, the whole chart now is downtrend, right? Because the market is moving down. Okay, this is a downtrend. This is a downtrend. The whole chart is moving down. Okay, the price is moving down. This is a downtrend. And currently, we have another downtrend here. But this time, we are seeing uptrend. Where did this downtrend started? This downtrend started from here. Created the high, created the low, then lower highs, lower low. Now the price is now rising to the upside. You might think of what will happen next. If you look at this level, you will see that if the price were able to reach this level, this is the level you can expect sellers entry, right? But when you want to use Fibonacci line, you trade, you draw the Fibonacci line according to the structure of the market. Come in, let me bring a use Fibonacci line, or you draw your Fibonacci line according to the structure of the market. Um, I'm trying to bring my drawing tool. Okay, so what I mean is that if you want to use your Fibonacci line, you draw it according to the structure of the market. If the market is moving like this, if the market is moving like this is a structure. This is probably the way the market is moving. The market is moving higher highs and higher lows. That is moving upward. Okay, and if the market is moving like this, that is lower highs and lower lows. This is another structure. This is a downtrend structure, and this is an uptrend structure. So if you want to draw your Fibonacci lines, what you have to do is draw from the low to high according to this structure. You should not draw from here to here. No, draw from the low to high, from the low to high. Okay, or you can draw from here to high here, or from here to high. Okay, not here to here. Okay, but you can also start from here to here, or from this low to high, or from this low to high, or from this low to high. This is how you're going to draw an uptrend structure using Fibonacci lines. Likewise, the downtrend. So, which means you start from the low, from the high to low. Okay, start from high to low. Here also start from high to low. Okay, because we have the high, we have the high, we have the low, we have the lower high, lower low. Okay, so start from high to low, high to low, not high, uh, not high to high. Okay, so this is what you need to observe when drawing your Fibonacci line. First, observe the structure of the market. If the market is moving upward, then you should draw your Fibonacci line. And there's a way we usually interpret it, that if you want to draw your Fibonacci lines, you start from A. So we take this, the first point, we take this as A. The market drive to this up or move up upward, the market rally to the upside and stop. So we take this as B. Okay. So if you start from A to B, then your C is going to be where you want to enter the trade. Okay. Start from A to B, then your C is going to be where you want to enter the trade. Your A should be the starting point, B should be the next connected point, and your C here. Or your A can be the starting point, your B can be here, and your C here. A can be here, B can be here, and C. Or this can be A and B and C. Or this can also be A, B, C. Okay? So it is always C you want to see, you want to use, or you want to enter the trade. You always want to enter the trade with C. So that is how you're going to draw your Fibonacci line. Then the same thing in a downtrend. This is A and this is B. Okay, because it started from A, end at B, and your C is where you want to enter the trade. So your A should be the starting point. Your B can be any of these low, okay, any of this lower low. Either your B can be here and your C can be here, or B, C, or B, then C. So this is what you need to observe anytime you want to draw your Fibonacci lines. Okay, so observe the structure of the market. Observe the structure of the market. Then the second one is after observing the structure of the market. We have Fibonacci lines. Um, we have from 0 to 33.6, 30.2, 50, 61.8. These are the Fibonacci levels. These are the Fibonacci levels. Okay, Fibonacci lines are Fibonacci levels. But the most level you want to use here is 38.2, 50, or 61.8. We are not using 100. Okay, we are not using 100 because 100 is the last point. Okay, so anything below 61.8, you know that it's going to towards the 100 level. Okay, reason why you choose these three levels because they are very strong. This level here is not mature enough. Okay, because when you start from A to B and you saw C here, it's not mature enough because we have some small retracement. But if we have enough retracement to here, you can have your C here, you can have your C here, you can have your C here. So there will be opportunity that the buyers is going to enter on the next movement. So when you are drawing your Fibonacci lines, make sure that the market is touching any of these Fibonacci numbers. Okay, not this. If you can touch this, but I guarantee you it's not mature enough to push the price upward. So that is why we cannot be using 23.6 as a strong Fibonacci lines. Okay, so what now? Okay, see that the price move upward and then move down. So what they are going to do is start from the high to low. Okay, let's say we haven't seen anything that happened around here, so we start from the high to low. Now we see that the price is respecting, this is the first number, 23.6. If you check when the price rise up, did it respect? No, because the market is not mature enough to reverse the trend. Okay, but you see that at the 30.2 level, we see a spinning top candle and we have a seller's entry. Okay, here also we see a rejection. This gives us that the 30.2 level is also a strong level. Now after 30.2 level, we see 50th level. At the 50th level, we didn't see any rejection from sellers, but we finally see a weak bias, which show a sign of reversal. That is a pin bar. So a pin bar at the level we reverse the market. So definitely we see that sellers enter very strongly. And what happened after that? The market keep going down. So we see that any of this number, the market, just pay attention to 38.2, 50, and 61.8. You will notice that if the market touch 30.2, the market might reverse from 30.2 very strongly. But It is not that mature like 58 and 61 level. The most level you that is mature enough to reverse the market is 61.8 level. You know, in forex market, this Fibonacci lines is totally different from the one of binary. Okay, in forex market, there's another number after 61.8 before 100. There's another number, maybe 71. In forex, maybe 71. Let me check it. Let me check it. I want to check the last number before 100 or after 61.8. So let me check the last number after 12.8. Yes, 78.6. 78.6. So after 61.8, we still have another number before this 100, 78.6. So most of the time you will notice that the market violates all these numbers here and try to cross 61.8 and finally reverse at a certain level. So which means the market finally reversed as 78.6, which is not included in a binary Fibonacci line. But in forex tools, we have it, okay, 78.6 level. So this is how you need to pay attention, and this is how, because once you draw the market line, once you draw the chart like this, and once you use the Fibonacci lines like this, it will make you understand where the market is going to reverse. So this is your A, this is A, this is B, and this is C. So it is only C we want to look for. Your C can be here, your C can be on 30.2, or it can be on 50th level, or 61.8, okay, or 76, 78.6, okay. So your C can be any of those levels, okay. So because that is how you draw your Fibonacci line. Then either you draw from here to here, or you extend it to again to this level, because we still have another lower low here. So your C can be any of this number. So if you look at it very well, you will see that 38, 23.6, when the price reach that level, the market reverse. Okay, it reverse again, and finally the market still cross it. So the 30.2, what happened? Price cross the 30.2, and what happened when we reach 50th level? We got rejection slash enter. Again, the price again still rise to that level. We got a hanging man at the 50th level, a hanging man, so the market reverse. So definitely it's like the market is going more down from this level. So the market reverse at the 50th level. You will notice that anytime the price touch any of this number, there must be a change in price. Okay, okay, so that is how to make use of Fibonacci lines. And again, okay, so let me check another. But now we see the market is moving up here. So you can connect from here, from high to low. So from high to low, you will notice that when the price rise to this level, because we know, like I said before, if you want to draw a Fibonacci line, you make sure that you observe the structure. So you connect from A to B. Okay, so this is actually A, and this is B. So C will be any of these Fibonacci lines. So we are looking for C. So you will notice that when the price reach this level, the market drop. So the first time it dropped to 23.6, we only see one retracement. Now 61.8, 61.8, we see a bullish, we see a rejection from buyers as is 61.8. Okay, so finally we now got the buyers entry. So buyers entered again. That is why the market is still going up. So the market can just violate 50th level 13.2 and finally reverse at the any number. Okay, so you have to pay attention to where the market will close. Pay attention to where the market will close, or you can connect from here to here because the market is moving actually like this. Okay, so we have A, we have B, then C can be any of these Fibonacci numbers. So here, what happened when the price reached 23.6? You see small weak red and the buyers enter. Again, the price crossed the 23.6. We got rejection from 30.2, but at 30.2 we see a doji candlestick after rejection, after this candle reject. So we see a doji candlestick, the buyer center. Now with the 30.2, same 30.2, the market did not reverse. Same 30.2, the market did not reverse, but it finally reached the 50 level. At the 50 level, what is this type of candlestick? What do we call this type of candlestick? At the 50th level, we call this type of candlestick inverted hammer. Okay, we call this type of candlestick inverted hammer. That is where the market now finally reversed, and that is why we are seeing some buyers entry. Okay, so the market did not reverse here, but it finally reversed at the 50 level. Okay, it seems that the market did not reverse, but let's see. Okay, this is 2 minutes. Wow, this is 2 minutes. I don't know that this is 2 minutes candle. So let me say 76.78.6 can be around here. Okay, let me just imagine it. Okay, this is just imagination. Okay, so you see that the price did not respect the price did not respect 30.2, it did not respect 50th level, and did not respect 61.8. But with my imagination, I know this is going to be 78.6. Okay, 78.6. So the market did not respect any of this number. Maybe the price will continue to this 78.6 before we finally see a buyer's entry. Okay, so that is why most of the time the market at times will not respect level. Okay, so because we can't control the market, so the market wants to do what it likes, so we have to leave the way it is and accept it. So that is what the market wants to do. So don't trouble yourself. So I think you can see that it got rejection from this level. I think the buyer should enter on the next candle. Let's see, because I'm expecting some buyer's entry. Okay, I think let me just use some $5. No, this is not how I want it to look like. Okay, I expect the price to come to this level, but see that I got rejection and the buyer entered. but this is not how I want it to look. I just want the price to come to this level, then go with buyers. Going with buyers again is wrong, and there's a gap, so it's better for you not to trade this kind of situation. So you have to pay attention to what the market is doing. Okay, you have to pay attention to what the market is doing. If the market is going to reverse here, then you have to pay attention to how it's going to reverse. Okay, what I'm expecting is that for the candle to close, like after this candle, next candle should be red, and then close at this level before I go with buyers. But seeing that the candle got rejection here and close as green, that doesn't give me confidence to go with buyers again. Okay, because the market might just give you a fake move and they finally form a red candle just to visit this level. Okay, so that is why you should not trade. Market can just go up and then give you a fake move and they finally form red because it's definitely going to visit this level. The first time it only got rejection, we only see some rejection. Maybe the second time is going to close at this level, then you can go with buyers. So that is what I expect. So now let's see what is going to happen. Okay, I think it's time to go with buyers. So it's time to go with buyers. So I'm expecting a buyer's entry here. Okay. So you see that the reason why I did not go with buyers after this candle because that is not what I'm expecting. I'm expecting the price to come close to this level. Okay, expecting price to come close to this level. No, what I mean is that if you are familiar with the market, there are some certain things that you need that you should be let me say you should expect. Anytime, the reason why I go with buyers here is because most of the time you will notice that anytime the price form this type of candlestick, the next candle always form green, right? Or anytime the market form green, the next candle was always red, right? But most of the time, I always notice that if the market supposed to reverse at a certain level, but only got rejection from that level, it's supposed to go up. But that is not how the market move at times. The market has to come close to that level to confirm that you go with buyers. And that is what happened here. That is why I decided to go with buyers on the next candle. Because this first candle got rejection, not to this level. God only got rejection, not to this level. So sellers has to come to this level again to visit the level. That is when you can go with buyers. Okay. So that is why I decided to go with buyers, not the first candle that touched the level. Like I said, anything, if you are familiar with the chart, you will experience so many things. Oh, very small green very small red candle. I think now the buyer should enter. The buyer should enter. This is OTC market. So many things happen. Instead of buyers entering, sellers entered. Now the buyer should enter the gain of the next candle. I'm very sure the buyer should enter. Because why? Maybe the market still has to, because the number here doesn't show. Assuming that the number show, then I will know that perfectly the market has touched the level. But I just imagine that this should be the right 78.2, or let me say 78.6 level, either 76.8 or 78.6. So I just imagine that the price should be at the next Fibonacci line should be at this level. Maybe the market has to come close to the level, or maybe it still have to reach the level somewhere here or somewhere here. We don't know yet. So let's see what is going to happen. Okay, it seems that the buyers are not interested. No sign of buyers. Here, the buyer supposed to enter and the seller still entered. So if the market cross this any of this number and try to go down, that means the level is not the market is not respecting any level. I think here and here, I think the distance is somewhere here. Okay, I think this is the right time the buyer should enter. So I think this is the right time the buyer should enter, or maybe a little bit more. Okay, see that the first time the buyers did not enter, the second time the buyers did not enter. I just imagine that the number should be around here, like what I show you here. That after 61.8 level, the next one is 78.6. So I just imagine the next level, next number. But in binary option, it doesn't show the next number. It only stop at 61.8. That is why anytime you see the market cross 61.8 and finally reverse below it, maybe it touch the 78.6. So I just imagine maybe the number is here. Okay. So this time I think the buyer should enter this time. So let's wait and see. And if the buyer should enter, my entry is not that safe. Let me check how many pips. This is 83, 82, 81, 80. This should be 79. Okay, this is the right level because each gap from this number is one pips. Okay, each gap is one pips because if you check from here, if you check from 23.6 to 30.2, from 23.6 to 38.2, someone want to join? Let me add it. 23.6, from 23.6 to 30.2 is 1 pips. How did I know that? Because if you look at it, we have 1.1683. Here is 1.1682. So how many difference? 1 pips difference. Here from 1.1682 to this to 50th level is also 1 pip. Then from 50th level to 61.8 level is 1 pip. That is 1.680. Then from 1.680 to actually where I play this line is also 1 pip because 1.60 to 1.679. So that is 1 pips. That means this is the level. The reason why I lost these two trades here is because I placed the line at the wrong level. I placed it at the wrong level. But if you look at the difference from 1.682 to this line, it's 1.682 because it's not up to one. It's not up to one pips. Okay, it's not up to 1 pips. But I finally imagine that it should be somewhere around here. So it's going to be 1.679. 1.679. So that is 1 pips difference from any of these numbers. So this is 78.6 level, and that is why the market reverse. So definitely the market is going to reverse to the upside. Okay, the market is going to reverse to the upside. So I just imagine that they always say that uh, imagination is very more important than knowledge. Okay, so imagination is very more important than knowledge. I think I read it somewhere. I just imagine that this is going to be 78.6. Although I make some mistake by placing the line here, but when I find out that the distance between the Fibonacci lines is 1 pips difference. So that is why the market did reverse from here. Okay, so another way you can draw your Fibonacci lines. Okay, this is a downtrend. This is a downtrend. So how do you draw your Fibonacci lines here? Start from A, connect to B. This is your C. Okay, 61.8 level. I think 5354. I think this is actually 78.6. That is where the market reversed, because the difference here, this one is 53, this is 54. So that is 1 pips different. So this is why the market reversed here. So this is 78.6. So that is why the market reversed. And as the market is going down, there's no way you can draw your Fibonacci lines. Okay, do not draw your Fibonacci lines in this kind of situation. Okay, and there's no even information on the left side you can use. So it is better not to use any Fibonacci line. Don't say because of this the last number the market is going to visit the last. No, that is not how to predict the next next candlestick using Fibonacci line. Okay, so what I'm going to do, because the market is going down, so definitely you draw from high to low because the market is going down. So I think, let me see another pair. Okay, so what is the structure of the market here? The structure of the market is down. Okay, this is downtrend. You are seeing this uptrend. This is not the market is still down. So don't say because you want to draw from here to here. No, make sure that there's a reversal to the downside. So definitely we are making use of this downtrend. Okay, so connect from A to B, then you look for C. So if this is 49, this would be okay. If this is 98, this would be 99. This would be 99. So I think the market is going to reverse. This next candle here should be green. Next candle here should be green. So, and if it is a hanging man, then you can go with buyers. You can go with sellers. Okay, so I think the next market should reverse here, because the difference, this is 988498. This is also 8499. So I think the market should reverse after this candlestick. So if this candle will close as a hanging man, then we can go with sellers on the next candle. Okay, so now I've seen some rejection. I think it's better to go with sellers. No, very strong one. It's not good to go with sellers here. So let me see. It's still 99. Still 99. It's not good to go with sellers. Okay, it's not good to go with sellers. Why? Because the candle is very strong, and to my imagination, it has already crossed the 78.6 level. Okay, it has already crossed 78.6 level. So I decided not to go with sellers. Though the market might still reverse, but that is not what I want. I just want the market to close around this level, not above. Because closing above means that the market is still going to continue, or it's still going to reverse. So it's better for you to stick to your plan, stick to what you are expecting. So I think there's no opportunity here. So let's check this. Okay, here, what is the structure of the market? The market is neither moving up or down, it's still moving a sideways. So in this kind of situation, it's either you choose another pair, but let me try something here. So I will connect from this low, high to low, and what happened? The market did not reverse. So definitely it's not good to draw your Fibonacci line, because the market is not trending. the market is moving sideways. Okay, this is a sideways market. It's not trending like this. Okay, it's not trending like this. It's moving a sideways. So when the market is moving a sideways like this, Fibonacci lines doesn't work properly. Okay, so let me take a look at another pair. Okay, I think this one is going down. So I will connect from high to low. This is not so it's not good to trade here because though the market has already reversed here 78 61.2 61.8 level. So let me check from this low to high. So the market did not reverse. So if this is 61.8, that is O 03, this should be O 02, but the market did not reverse. So I think that is that. Let me check another pair. So you see that I didn't draw the Fibonacci anyhow. So I just want to make sure that I have a good reason why I'm drawing the Fibonacci lines. Okay. This one also the market is moving sideways, but we have a clear uptrend structure here, which means we can connect from this low to high, or let's say the highest high, and 61.8 seems to be where the market reverse. Okay, still there's no opportunity here. Okay, this is a trendy market. This is a trendy market, but the market is not has not yet give us a strong pullback. So here we connect from here to here, so there's no strong pullback here yet. So in that case, no opportunity to use the Fibonacci line here. Okay, so let me check this. Here the market is moving a sideways, but I'm seeing small downtrend here. So let's see if we're going to look for C. This is the highest high, the lowest low. No, no opportunity to use Fibonacci lines here. You see that market reverse upward. Okay, market reverse to the upside, and here the market makes some retracement, but it's not that strong. You know, if this is going to be 78.2, another number here should be maybe 80 something, 81, 81.9. I don't think so. Maybe this is 49. Okay, this is 98, 99.00. So I think the market should be, this is another level the market should reverse. Let me check that on trading view, because there are some numbers on the trading view after 70.2 or 70.6. Let me check settings. After 78.6, we have another one. Okay, start from 0. Okay, 61.8, 17.6. So it starts from 1. Okay, so it starts from 1. So let's see if the price is going to reach this level, then we open the trade. And here it seems the market is trying to go down. So from A to B, then this is going to be C. Remember, I told you that 23.6 is not mature. So definitely I'm not going to open any trade. But if I see opportunity like a reversal candlestick here, then I'll open a trade. So let's see if there's going to be a reversal candlestick here. And here there's no opportunity. Okay, here I think there's going to be an opportunity to open trade here. So let me check on that pair. Maybe the market has given us opportunity. Okay, so the market move up here. Let's say we connect from A to B, and this is going to be C. Um, this is yes, 38.2. Okay, to what I'm seeing here, it looks like a spinning top, but it's below 23.6. It's below 23.6, so I rather not they open any trade there. This also look like a shooting star. It look like a shooting star, but let's see what's going to happen on the next candle. Maybe the price is going to continue again for 1 minute. So I'm expecting one green candle before I go with sellers. And here a shooting star, a inverted hammer, 23.6, but this is not what I'm looking for. Here the market crossed at 8.2 level. Okay, so what is the next level? The next level is, okay, sorry, that is not what I mean. From high to low. So we are looking for 61.8. Okay, 61.8. But let me now draw it low from low to high. So the market is now at the 50th level. Okay, 50th level, the price reversed from that level. Okay, this time I think sellers should enter. If this candle we got the rejection, sellers should enter. See that buyers enter. I would have taken this trade, but I draw the Fibonacci in the wrong way. So if I know, I would have taken this trade because the market is reversing from 50th level. See that buyers open exactly at the bullish candle open exactly at the 50 level. This also, it crossed the 23.6, so it's not mature enough like other previous level. So that is why I didn't open the trade here. Okay, this time, oh shit, I missed this opportunity because this is a, let's see, I want the price to give me to make some pullback, then before I go with sellers. This is exactly what I'm looking for. Okay, the first time the market got rejection, but it's not close to this level. So I expect the price to reach the level before I go with sellers. But it seems that the market is too fast. And if I open trade here, it will be a late entry. Okay, so I'm just giving you guys example how to use Fibonacci lines. This is the first method to use Fibonacci lines. I will show you the second method. Come on, I need some rejection. I think we should go with sellers. So let's see. I think I'm going to lose this trade because of my entry. Okay, you see that I was lucky enough to win the trade. Very small, very small gap to my entry. Okay, but I still won the trade. So the second method which I want to show you guys how to use Fibonacci retracement is by drawing a zone. Okay, by drawing a zone. Let me start from Euro USD. Okay, so let me delete all the line. So it's the same rule you have to follow. Draw from observe the structure of the market. Okay, the structure of the market is moving down, so which means I can start from drawing from high to low. Then my C is going to be at any of this level. So if the market is at the C, then I will look on the left side to see any reversal zone on that C, on any of this level before I enter any trade. That is what I'm going to do. But let me see. Um, the market is moving up here. So if I draw from here to here and 81, 80, so which means if it's going to be my C, I'm going to look for a reversal zone at this C, a reversal zone at this C. Okay, this is a reversal zone. Market reverse here, market reverse here, then market also reverse here. So which means I can open a trade around here. But I just need the candle to close at this zone. So after drawing from 61.8 level, or let's say this is our 78.6 level, and below it, I draw a zone. So I draw it as zone just to make sure that the market capture all the reversal zone. I think I don't want to make any mistake. This is not perfect zone. I think this is the right zone. Okay, that is the right level. But the candle crossed below it, so it's not good to open any trade here. Let me check another pair. Remember, observe the structure of the market. From low to high, 23.6 level. From 23.6 level, do we have any reversal? Yes, we have from 23.6. Any reversal here? Yes, we have reversal, we have reversal. So definitely the market is supposed to reverse. So if I see any pullback here, then I'll go with buyers. This is another method to use the Fibonacci lines. A little bit more down. Okay, time expired. So let me check another pair. Euro GBP. Euro GBP. Okay, let me say from here to here, and 78.6 level is our strong reversal level, and the next line should be here, which means I can expect some seller's entry. I can expect some seller's entry here, okay, because it's still at the 78.6 level, so I expect some seller's entry. 78.6 level, I'm expecting some sellers entry. Okay, so that is why I decided to go with sellers here. So let's see if the seller will truly enter the market. Okay, So to what I'm seeing here, it seems that the sellers are not strong enough, but I'm expecting one bearish candle. Only if the bearish candle is going to be weak. Okay, it seems that sellers are not strong enough to form a red candle. So there's no sign of sellers here. There's no sign of sellers. The price is ready to go upward. Okay. So what I want to do here is after placing the line at the 17.6 level, so I try to draw a zone, but no sign of sellers. No sign of sellers, which means the price is trying to go up. So let me check another opportunity. Okay, if I drop from A to B, 23.6 level and a reversal zone. So the market already reversed, but the sellers against it is the level, so I don't trust that level. So let's see USDCHF. So let me draw from high to low, from high to low, and this is going to be 17.6. I think yes, because this is 0405. So if actually I want to draw a zone, it should be something like this. Okay, so let me see the candle will cross this zone. So the market cross this zone, definitely it's not going to reverse. Still, there's no opportunity here. Very strong candle. Okay, there's no opportunity here. The market is moving down, but it's moving up here. So let me drop from low to high, then 38.2 level, 38.2 level, and a reversal zone. How many reversal do we have? Yes, we have one here. So let me adjust the line. At least two reversal. Yes. So this is a reversal. So which means I'm expecting the price to reach this level, reach this zone, then I'll go with bias. So let me check what I'm here. Here, there's no opportunity to draw the Fibonacci lines except the market makes some retracement. But if I draw from here to here, okay, let me try that. Let's find out. Okay, 61.8, the market did not reverse, and 61.8 is actually 1.8. This should be 1.9. And if I want to draw a zone, it should be something like this. Okay, because the market reversed multiple times here, here, and here. So I've gotten a reversal zone, and then market reverse once here. So I'm expecting the candle to close inside this zone. Then I will go with sellers. Okay, the market now is at the 50th level. This is 50th level. So let me draw a zone from this 50th level. The zone is somewhere here. Actually, here. So I think it's time to go with buyers here, and here it's time to go with sellers. Okay, So I'm using the Fibonacci line to draw a zone. Okay, so this zone is actually where the market reverses most. That is why I'm drawing the Fibonacci line, because it's another method of using the Fibonacci lines. Okay, seeing that this one is not going to reverse, and it seems here that this one also only small reversal. So okay, this only weaken the sellers. Okay, it only weaken the sellers, but here it reverse, and here it only weaken the sellers. So if sellers enter, maybe the market is not respecting 50th level. Maybe it's going to respect 30.2, 61.8 level. So let's say this is 61, 50th level. This is 61.8 level, and this is a zone around the 61.8 level. This is a reversal zone. Here, here, here. Okay, that is a reversal zone, and here also reversal zone. So which means you can expect buyers entry. The market violate this 50th level. That is why they not reverse. I think that was my mistake. Here the market did reverse because it's at the 78.6 level zone. 78.6 level zone. Okay, so the market did reverse here because the sellers are weak. So the buyers around this area only weaken the sellers. Okay, so maybe that's why the buyers entered here. So the second method I want to use here is how to use Fibonacci lines to find buyer zone and seller zone. Let me see how this candle will close. How to find buyer zone and seller zone. Let me say I draw from here to here, and where are the seller zone? This is seller zone here. The seller zone is 78.6 level, so which means I can expect the price to reverse at the seller zone. Okay, so let's see what is going to happen. Okay, there's no opportunity here, but let me draw from here to here. This is seller zone, so I can expect the market to reverse because of this seller zone. Okay, 50th level, because of the seller zone, I'm expecting the market to reverse. Okay, I'm expecting the price to go up because the seller zone is here. The seller zone is here. Okay, so if the buyers goes up a little bit, I'll go with sellers. Here the market is already at the seller zone, so I connect from the high to low, and the market is at the seller zone because we have multiple sellers around this zone. Sellers entry, sellers entry, sellers entry, sellers entry. So that is why I think sellers will enter again. Let me check one more trade. Okay, this is Euro JPY, USD XOF, USD CHF. I think these two pair remain, USD ZAR. So let's see actually if we were going to want this trade because of my entry is late here. And here there's no opportunity to draw. Okay, that was a winning trade. Here there's no opportunity to draw the Fibonacci line. So let me draw it again. Let me start from high to low. And if this is going to be 78.6 level, these are the sellers zone. Okay, these are the sellers zone. So which means we can expect one green candle to reach the seller zone before we go with sellers. So let me say I draw it from here. I draw from here. This is seller zone. If the price comes to this level, then we can go with sellers confidently. Then Euro JPY connect from low to high. And where are the buyers? The buyers are waiting at the 78.6 level. Okay, buyers are waiting at 78.6 level. So which means if sellers come to this level, then I can go with buyers. You know, all this is just like my imagination. So I just imagine that this is going to be, I think I'm correct. This is 92, this should be 91. Yes. I think the buyers are here because we see buyers entered, buyers also entered here. So we have some buyers around this area. We see some buyers entry. So which means we can expect buyers entry. But I want the candle to give me a good opportunity, not a fluctuation. Um, we can't go with buyers here. Why? Because this is the major level where the buyers are waiting. Okay, the buyers are waiting here. So we can go with sellers. Instead of going with buyers, we can go with sellers. The buyers are here, not here. So we can't go with buyers here. Okay, because if you look at the chart, this is where the buyers are waiting. You see so many buyers entries. Even here, buyers are here. Here also we see some buyers entry here. Here also we see some buyers entry here. So definitely that is buyers zone. So in that case, the candle close here, we can't go with buyers. So that doesn't mean that because we see some buyers entry here, we can go with buyers here. No. If you look at this area, the buyers that are waiting here are more than what is waiting here. So I'm expecting one more red candle to reach the buyer zone before I go with buyers. Or I'm expecting one red candle. Oh, come on. Why the buyer center here? Very weak green candle. Okay, here from high, from low to high, and the buyers are here. The buyers are here. Definitely buyer center from this level. Why the buyer center from this level? Maybe reversal zone. Okay, I think I made a mistake here. So here the buyers must reach this level before sellers enter. So that is why the buyers are struggling to form, despite seeing a weak green. Buyers must still continue to reach this level before sellers enter. And here the buyers are still here because we see the buyers entered, buyers entries at the 50th level. Okay, so the buyers are still here, but definitely we lost this opportunity. So I lost this trade because I don't expect buyers entry. Maybe the market still want to form a green candle. So this is the level I should expect buyers entry. So maybe next candle will become red and buyers will enter. So let me prepare for that. No sellers entry. The market is still going up. Okay, now the candle is now at the level. Here the buyers are struggling despite seeing a weak red, a weak green. So they will struggle until they reach the seller zone, because the seller zone is where we see so many sellers entry. Okay, we see sellers entry here. We see sellers entry here. So definitely this is a seller zone. Also see some sellers entry here. So buyers is going to continue to that seller zone. And here, this is buyer zone. Okay, because we have so many buyers entry. So this is buyer zone. So I'm expecting the sellers to reach this level before I go with buyers. Here the market is still fluctuating. Okay, so I just want to take one more trade. Here I'm expecting some buyers at this level. Only got rejection from buyers, but I don't know why the buyers are entering here. The market should continue to this level. So this is the level we can expect buyers entering. Here the market already reversed because we have so many buyers entry here, buyers entry here, buyers entry, buyers entry, buyers entry here. Okay, so that is why we see some buyers entry here. So which means here also I'm expecting one bearish candle to reach this level before we expect buyers entry, because we have so many buyers around this zone, and that is why I'm expecting the market to continue. But buyers entered here. I don't know why the buyers entered here. So these are the three methods of how to use Fibonacci lines. Okay, this is how I use Fibonacci lines. So I don't know about other traders, but this is my own method of using the Fibonacci lines. I want to go with buyers. A little bit more down. No, I can't go with buyers. I can't go with buyers here. I can't go with buyers here because this is the level we can expect buyers entry, not here. So I will wait. I will wait to see the buyers will reach this level, then I'll go with buyers. Sellers reach this level, then I'll go with buyers. Okay, I think they are coming close to the level, because also we have so many multiple rejection. So which means the buyers are really waiting around this area. So for you to enter the trade, you have to wait for the candle to come to this level, then go with buyers. Okay, seeing that the buyers choose the area to enter here, so the market did not reach this level, so the market is reversing at 61.8 level. Okay, so I think this is coming close to the seller's zone. We have seller's entry. We have so many sellers at this zone. So this is coming closer to seller's zone. So I'm expecting one red candle, okay, because we have the sellers around this zone. So I'm expecting seller's entry. Also here we have seller's zone. We have seller's entry around here. Oh, I made a mistake. My timing, the timing is not correct. Time is not correct. But let's see 1 minute. Let's see what is going on in 1 minute. Actually, it's on sellers. The candle is at the sellers area, so I think it should form red on 1 minute candle. But the time is not correct on 2 minutes. So, but actually, I'm expecting sellers entry on 2 minutes. But it seemed that I opened the trade with 1 minute expiry time without changing the expiry time. So that is how to trade Fibonacci lines. These are the three ways I do trade Fibonacci lines. The first one is trade according to the numbers. Okay, the second one is zone, and the second one is a buyers and sellers zone. Okay, the first one is the reversal zone. If you see multiple reversal at the end of this number, you draw a zone from there. Okay, so the third one is the buyers and sellers zone, where you see the market reverse multiple times, like with too much resistance, so many resistance and support. Like here we have green to red, green to red, green to red. So we have sellers here, sellers. So that is sellers zone. Here we have red to green, red to green, red to green. So this is buyers zone. So that is three ways of I trade, how I do trade using the Fibonacci lines. Okay, but I will not advise you. This is just a less. This is just a. You can see that even though I go with sellers with 2 minute expiry time, I still lost the trade. The sellers are very weak. Okay, and I still lost the trade, but I was lucky enough to open the trade with 1 minute expiry time, so I won the trade. Okay, so one thing is, if you want to learn how to trade binary options, you have to take every word I said, go and practice. Practice is what make perfect. So go and practice it. Okay, go and practice. This I just took this section. So if I'm in a business of trading, I might not lose. I might lose some. Let me say out of 20 trades, I might lose 2 or 3 or maybe 4. But this is just a section. I just use that to explain how you can draw Fibonacci lines, how you can trade with it. So that is why we have some loss. Okay, so this is totally different from when I'm trading personally. Okay, guys, I think I should stop here for today. So by next week, maybe in the group, maybe some of you will talk about any topic we're going to talk about, going to discuss again by next week. So by next week, meet again by next week. So if you have any question, you can ask now. Any question? Okay, so let's stop today. By next week, we're going to talk on another topic. So good night, everyone, and have a nice day.